This series is about market analysis. Market analysis is the way we analyze any market, but more specifically, the Forex market, to see when to buy, when to sell, when to enter the trade, when to close the trade, how to look at probability of the bullish trend or bearish trend, what the market is about to do, what price has done in the past. And also that will tell us all the factors that can affect price in the market.
Three types of market analysis. There are three ways on how you would analyze and develop ideas to trade the market. Three main market analysis. One, technical analysis. Two, fundamental analysis. Three, sentiment analysis.
These three ways give us the idea on what to trade and when to trade in the market, when not to trade in the market as well. These technically should be three type of points that we need to develop that we present with three ways of thinking about trading and about the market. What is fundamental analysis? Fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. So when there is a big economic news like GDP of any country, when there is high interest rate, those are economic factors that affect price in the market. Any big social event in this country, elections, for example, political forces, war around the world. If, for example, US is going to engage in a war, we need to understand how do we trade the US dollar comparing to the other currencies.
This is the way to look at it. If you look at the picture, when the economy of a country is good, the currency value will increase. When the economy of a country is bad, the currency value will decrease. I think that's the good way to look at fundamental analysis. It's what is going on in the economy. If you think about it, that makes a lot of sense. Why? Because in the economy, supply and demand determine prices. So if supply and demand determine prices, in our case, supply and demand in the Forex market determine the exchange rate. And this is how, if you are Forex trader, this is how you make money in the market by look at the possibility of the exchange rate of two currency pair will go up and down. That's how you make money. So using supply and demand as an indicator of where price could be headed is the easy part. But the hard part is take all the analysis, all the factors, understanding, analyze all the factors that affect supply and demand.
For example, forexfactory.com gives you all the economic factors every day that will come out that might affect prices in the market. And you have to pay attention to world news, what's going on, war. When right now, this 2024, end of 2024 is election time in the US. We need to pay attention to that. When there is a big news that the Congress is voting against cryptocurrency, we need to pay attention because those are fundamental analysis or economic, social, and political forces or factors that affect price in the market. What is technical analysis?
Technical analysis is the study of historical price action in order to identify patterns and determine possibility of the future direction of the market. Technical analysis is when traders study price movement. The theory is that a person can look at the historical price movement and determine the current trading condition and potential price movement.
Where is this asset going? Is it going up or down? Is it consolidating in a time zone? This is applied to currency, to stock, to crypto, to index, any financial asset that you are about to trade or buy or invest in. You can, when you know technical analysis, you'll understand price movement. If you buy at the top or if you buy at the bottom, what might happen. So someone who uses technical analysis is called a technical analyst.
Technical analysis look at the rhythm, the flow, the trend in the price. So what happened last year, what happened 2 years ago will repeat itself in the future.
Technical analysis have the belief that all market information is already reflected in the price. Technical traders generally ascribe to the belief that it's all in the chart. Whatever the chart is telling you, this is it. There is no other information there. Everything is already included. Okay, so you can go back in time and see what happened. You see, hey, this is what caused this to happen last time. Now we close to it. Now something might happen.
Technical analysts look for similar patterns that have formed in the past and will form trade ideas believing that this could possibly act the same way that it did before. Technical analysis is not so much about prediction, but it is about possibility.
When you do your technical analysis, you're looking at possibilities, probability. We are not looking at prediction. We're not trying to predict the market. That doesn't work. But we have the possibility that the market might do the same thing. It not guarantee will do it. There is always probability it will not do it. But when you get to those level in your technical analysis, 70, 60, 80%, if depends on the time frame, that might be a good area to either buy or sell or to stay out of the market. Depends on what you're doing. That gives you an idea what to do next, when to take your trade, when to sell, when to buy, when to stay away from the market. Technical analysis is the price study of the price action, the historical price action, in order to identify pattern and find possibilities for future direction of the market, so you can make good technical, sound trade decision. What is sentiment analysis?
Sentiment analysis is used to gauge how other traders feel, whether it's about the overall currency market or about a particular currency pair or about any other asset or any other market.
Sentiment is the emotional part of the market. How those other traders are thinking or feeling? Are they reacting by fear, by greed, or do they see something? If everybody's selling, that's not the time to go against the crowd. They will burn you up. Okay? If everybody's selling a currency, that's when it's going down a lot of momentum. Momentum will be great. You'll see there is a lot of speed in the market. Either you join them or stay away. So sentiment of people trade for many decisions. When you end up winning trade, that's mean both buyers believe what you believe. What happened? When more people believe the pair of currency will go up, yeah, everybody get in and buy. they push the market even higher. But if you go against that, you will lose your trade every time. You have to look at the overall of the market. What is this market has been doing for the past year or so, for the past month? Okay, those are the sentiment. What our traders are doing. When you know technical analysis, you know what the crowd is doing. You know what other traders are doing. That will help you on top of your technical or fundamental analysis. That will help you to keep track of your emotion. Okay.
The Forex market do not simply reflect all of the information out there, because traders will all just act the same way.
Traders are the same way sometimes. Sometimes they don't. Okay? This is why sentiment analysis is important.
Each trader has his own opinion of why the market is acting the way it does, and whether to trade in the same direction as the market or against it.
You need to know what's the sentiment so you know when to go against the trend and when to go with the trend. Okay? Remember, the trend is your friend. If I would advise any new traders, go with your trend. Go with the trend. Okay? Go with the trend. If you know what you're doing, if you become a professional, then you can sometimes you can trade against the trend. But you have to know it's gonna be at a reversal area. Okay? At a supply area or demand area. At a support or resistance. Depends on the level. Weekly or monthly or daily support or resistance. So this is why sentiment is important. When you say, the banks are in a crisis, everybody's selling the bank. That's not the time for you to come in and buy the bank. Okay? This is why analysis is so important to you and I.